Good morning. Today is Friday. It's June the 9th. The time right now in Hong Kong is 5:12 in the morning and the market have just closed. And today we will talk a little bit about what happened overnight as far as economic numbers are concerned. We have the release of the US jobless claims number, which is a weekly event, and it does show that the latest number suggests that there is a softening of the labor market in the US from an expected 235,000 jobless claims to a 261,000 claims for a rise of 28,000 claims. This means that the market is definitely softening in terms of the labor market. So we could see that in the next month's unemployment rate as far as new jobs creation is concerned. So this is definitely in the same direction as what the Federal Reserve has been hoping to see a deterioration in the job markets so that we can have evidence that the US efforts to tame inflation is finally beginning to see some kind of results. So in terms of these effects on the markets today, we will concentrate on talking about the US dollars index. And the dollar index is basically a basket of currency of US major trading partners, with the euro having a much higher weightage compared to the other currencies, for example, the sterling, the Canadian dollars, and the Japanese yens. So the chart over here shows that we have a rise in the dollar index from a low of 100.52 all the way to 104.62 before it pulls back recently to 103.32. But then we have a bounce back to 104.36, and finally yesterday, because of the US jobless claims numbers, we have seen the dollar beginning to soften, and this time it has already gone below the 103.32 low and is heading towards the 102.56 to 103 level. So if this is the case, then between the 102 102.60 to 103, this market is actually area is actually conducive for uh buying interest to actually re-emerge, because basically what I'm seeing here is a technical pullback in a three-wave pattern aiming for that bracket of prices which I just mentioned. Top side, there is a possibility the rise from the low of 100.52 may actually extend higher beyond the March 15 high and probably gunning for the March high of 105.87. So this is technically an extension of a existing bull run. Okay, so the dollar strength is very much in place, and this is seen as a temporary pullback in the index itself. So do watch out for the possibility that the market may actually stabilize between 102 half to 103, and that could present a buying opportunity. Thank you very much, and I'll see you over the weekend. In the meantime, you have a great weekend ahead. Bye bye.